I want to be on a more May the 4th be with you type of a day to try to make sure that we stay on task and on time and all that jazz. So I'm Rick Demko. I'm representing NAIFA, Texas. So I'm honored to serve on the board. And I want to thank not only the board, but also our professional development committee, our sponsors, and all of you for attending. And this will be recorded. I'm certain that plenty of folks were going to be jotting down notes, but be aware that you can watch this in an encore type of capacity as well. So I'm going to try to get out of your way as quickly as we can, because I'm really excited about the disability income conversation. There's, I think, on 2 occasions I've admitted this out loud, but I think this format would be applicable to my own story. So my father had a disability income policy that he executed when he was 55, and he used that plan up until his death of 76, and that paid on monthly income of just shy of $12,000 month in, month out, without fail, to make sure that he still had the capacity to have the lifestyle that he wanted. And I'll tell you that my dad did certainly do that. So he played golf even the day before he died. But with that being said, again, thank you for joining us. NAIFA Texas is really the grassroots operation as it relates to advocacy for our industry, for our clients, and the ability to provide proper, adequate levels of planning for our clients. We're the only association within our industry that does this on the local level. Federal is important, but being able to sit knee to knee, elbow to elbow with our state legislators is equally, if not more important, being that these products in our industry is regulated by the state. But I also know, so that boring stuff aside, I happen to know that producers that are engaged within NAIFA are not only going to be in the business longer, they're going to produce more, they're going to serve more families, they're going to make more money. If it weren't for NAIFA, specifically NAIFA Texas, I would not be in the business. It's easy for me to say because the business is tough enough on its own. But with all that said, would love to jump into our panel. I'm going to bring Rhonda Vickery up. So Rhonda serves with us on the state level. She is the chair of our diversity and inclusion committee, and it's trying to have conversations with advisors and also our clients that don't just look like everybody else. It's an old industry, it's an old white guy industry, unfortunately, but we've seen great waves and strides that have moved in the other direction. Rhonda is a force to be reckoned with on that side. She's been in the business since '96. She's been everywhere from UBS and Morgan Stanley and Mass Mutual until really landing at her home, where she's been now for a couple of years with Guardian. And couldn't have thought of a better moderator for the panel, considering, of course, her life understanding, but really her understanding of disability income products. So I wouldn't be surprised if Rhonda's dropping some bombs along the way too. So I'm excited for this. She's a mom. She's an advocate in her community. I think I remember a story even about her serving as Mrs. Claus on occasion in the Houston area to drop presents off at schools and hospitals. So Rhonda, since you're snickering, I'll hand it over to you and I'll get out of the way. I'm excited for you guys. Thank you everyone for being here.
Thank you, Rick, and thank you everyone for joining us today. We're so excited to have you here. And thank you, Rick, for sharing that very poignant story of your family's direct experience with the power of what DI can do in a family's life. And you'll hear more about that today. But again, we appreciate that all of you are joining us. We have a series of questions that was presented to us ahead of time. And as well, we should be able to take some questions in the chat. So at any point in time to the chat, to the panel, if you have a question, you can drop it in there and we'll be moderating that as well, or monitoring that as well. But I would like to introduce our speakers today, and they're all wonderful sponsors of NAIFA in their communities and throughout Texas. And we're so fortunate that they also happen to be DI experts, because it's May being Disability Insurance Awareness Month, as many of you know. We'd like to really bring home to you some really great knowledge and some of their expertise, and they're going to share more about that But the first person I'm going to introduce is Rodney Mogan, and Rodney has a very full bio, and I would strongly encourage you to read through it because his wealth of knowledge and expertise in financial services it just spans the breadth of that. But I'll share a little bit of that, and the bios will be available post this session when we send out the recording as well. But Dr. Rodney Mogan and his team, they are in the top 25 of several companies that focus on DI and long-term care production since 2001, with over 3,400 DI policies in force already and 835 long-term care policies, 3,500 life insurance policies, 265,000 individual health policies, and 465,000 medical supplements just in 2021, and on his way to great success for 2022. So it shows you the power behind Rodney and his team and what they can do over the course of a year, but what they do in the lives of clients throughout Texas. And again, we have him here with us today. Dr. Mogan, would you like to share a few words with us?
Yep, Rhonda, thank you very much. And, thank you for not reading my whole bio. But I really am glad to be part of this panel. And, Disability Insurance Awareness Month, I think Derek and Austin will agree. I think we should be talking about this really in April so that we can be going out to talk to our clients here in May about it. But I'm glad you all are here. To me, it is the most undersold or under-discussed product out there in the financial planning industry. And I look forward to bringing a producer's perspective. And, I work a lot with advisors who don't want to deal with it. And they refer the disability and long-term care to me. And I'll be more than happy to talk about from a producer perspective today about how to talk about it with clients and what some of the challenges are. So I'm looking forward to being part of this panel. Thank you.
Thank you again, Dr. Rodney Mogan with Solve Your Puzzles. Again, avid sponsor and supporter of NAPA Texas and our incoming president for next year for NAPA Texas. Thank you. Next, we'll introduce Austin Covers, who is the Disability Sales Manager for Principal Financial Group, covering Texas, Oklahoma, and Louisiana. Also a proud risk protection specialist working with individuals throughout his territory. Austin, thank you for joining us today. Would you like to share a few words?
Yeah, thank you so much. Like Rodney said, excited to be a part of a great panel, and we'll touch on a lot of different things. But just first thing I wanted to mention was disability insurance and the fact that it has a seat at every table, which we'll get into. So whether we're talking about business owner solutions, which Principal does a great job with, key person replacement, overhead expense, disability buyout, business loan protection, things like that. Disability has a piece in that conversation if we're talking about employee benefits with supplemental coverage, which we will dive into as well. Disability has a seat there. And then also we're just talking about an individual's lifestyle. Obviously, disability is important in that conversation as well.
It certainly is. And rounding out our panel today is Derek True, Disability Income Advisor with the DI Center. He's a Texas Tech grad, go Raiders, and also Brand and Operations Manager for the DI Center. Again, Principal, Solve Your Puzzles, and the DI Center are avid sponsors of NAPA Texas. And so Derek, thank you for joining us today and sharing with us. And I'll give you the floor to share a few words.
Can't hear you, Derek.
Derek recently had another baby, so sometimes we know that lack of sleep can affect things, but normally really great with technology. Are you there this time?
Yeah, apparently the that was working in the test run stopped working and gave out on me. So I'm sorry about that. So appreciate the intro there, Rhonda, and excited to be here. I'll just, piggyback on what Rhonda and Austin said, that, the importance of this coverage, the importance of this month. One thing I will note is that, you're already talking about income protection and income replacement, even if you don't know it. So whether you're, a DI geek like us here on the line, sorry, Corey Anderson, using your term, or you're just, somebody brand new to this, income replacement's already on your radar, whether it's life insurance, annuities, retirement planning, long-term care planning. You're already discussing it, just maybe not calling it like it by its name. And so we're going to be talking disability income, but really higher level income replacement, kind of, we almost label this prevention insurance. You're preventing that loss of the lifestyle, you're preventing that foreclosure, you're preventing that bankruptcy. That's really what this coverage at the heart of it is about. So excited to get into the questions.
I love the way you stated that about prevention insurance. I actually haven't heard it said that way, but in my own family's experience, my dad being a general contractor and having cancer, my family almost lost everything because they didn't have that type of protection in place, that prevention protection. So thank you for bringing it up in a new way to say it. We're going to go first to Rodney. Rodney, I'm going to put my reading glasses on, y'all. So Rodney is representing today some of the challenges and the questions and the aspects of putting DI into your practice as an individual producer. So Rodney, I have a few questions for you first. What are your biggest challenges when discussing income protection and some of your solutions to those challenges?
Obviously the biggest challenge is dealing with preconceived notions about income protection or the phrase disability insurance. So I really do not ever in front of a client use DI or disability insurance or whatever. If I'm talking with a rep or an agent, I'll probably use it so they understand what I'm talking about. But to Derek's point, I will actually call it income protection, income loss protection, protection insurance. One of those things, so I can get past that initial challenge of, well, I may never use it, or some of the other different things. I think one of probably the biggest challenges, and no one has to answer, but if I were to ask the group, I say you're disabled, what do you immediately think of? You think of someone that is in a wheelchair, can't move, can barely talk, can't do anything. That makes up less than 1% of the entire disability claim market. There are, our neighbors, our friends, our family members have had cancer. They've had to deal with different things. They've had a heart attack where they couldn't work for 8 months. Those are the things I try to make it real. And so a lot of the solutions I bring are through stories. And then, not that I'm trying to plug something, but they are also a sponsor of NAIFA Texas, and that is One Protection. And that is it's a software system that helps tell the story even better about disability or income protection so that clients can see what they are paying for protecting their home, protecting their car, protecting their boats, and that they really are not paying anything for protecting their biggest asset, which is income protection. And then once you have that story, that takes away almost all of the challenges. I would say, I think Derek and Oscar can probably agree. I think the other major challenge would be when you have someone that has income protection at work and you show them a $150 premium or a $200 premium or something like that, because it's not covering it, work isn't covering everything. And they're like, well, my policy is only cost me $5 every 2 weeks. Well, of course, because it's only going to cover a certain amount. So getting that price difference and, again, using tools like the One Protection software does help me do that so they can see what they're paying versus really what they're really getting for it. So.
Thank you. I agree that One Protection software, when we saw that rolled out at the conference in February, I was super impressed with that. Okay, so the next question for you, Rodney, is where do you bring up income protection in your process, in your planning process?
So when I sit with a client, it is probably the third thing that I talk about. And what I mean by that is I start talking about a financial house. And everyone is very familiar with what a house is or a building. And so I talk about the foundation. The foundation is the cash reserve. And I talk about walls and a roof. Those are the three main things you need is to have a house, right? And so I talk about the roof, and I kind of put it separately from disability insurance. The roof is life insurance, but the walls, which really hold up the roof, are the income protection plan. And that's really where I'm talking about disability insurance. And I talk about income protection, but I talk about, like Derek mentioned, I talk about we want to protect income protection while you're working, while you're retired, all those different things. So I have a really wide conversation about it. And so that's always something how I'm talking about it. And then I start collecting the information and I start asking different questions about what are you doing with your income protection? Do you have it at work? Let's talk about that. What does it really cover? And then, I draw it all out. And just like, if we've ever driven down a street where a house has some cracks in it or in the walls or the roof or whatever, I will put some cracks into the house that I'm drawing. This is the cracks that you have. We want to seal those so that your house can be strong. And so I use it all as part of my overall foundation that I talk about, but it's the third thing that I talk about. And it's really the first, that and life insurance are probably the first two things I'm implementing in the process.
The final question is, and I'm going to open this up to all of you after Rodney shares, is what are the most common objections you hear and how do you address them? So Rodney, as a producer, what are some of the most common objections you hear from clients in the planning process?
The most common is obviously I have it at work. And so, I've kind of already talked about that. I do address that up front. I talk about, what are the holes that policy may have. Maybe they are, like Austin and Derek and myself, we may have a salary, but we also get bonuses and we get commissions and things like that. So we might have a disability policy that covers our salary, but it may not, but that might only be 30% of our overall income. So I'll point out that hole in there. That's probably the biggest objection I hear. The other one, I haven't heard as much lately. So I'm interested to see what Austin and Derek have heard, but sometimes the government or my family will take care of me. And I've got a very great personal story about, my wife is permanently disabled. I know Andre's wife is disabled and we're caregivers, but that's also hard to run a business. That's also hard to do different things. So you have to give up certain things. I also know a situation where I have a husband and wife that the wife said, "Oh, my husband will take care of me," and husband divorced her when she got disabled. So he didn't really do a really good job of taking care of her. So I think those are really the two major objections. And you really have to have a conversation about what would happen and how would you address it and tell stories about that. So I'm interested to hear what Austin and Derek hear as well. So
Austin, I'd like you to weigh in on that for a moment, especially being a risk specialist now focusing on income protection with Principal, but then your background in employee benefits, since Rodney mentioned that's one of the common objections is I already have that through my employer. What is some of your experience in that area or some other objections?
Yeah, I mean, from a carrier's perspective, I'm hearing different objections coming from advisors and agents about why they aren't selling more DI. And the number one reason I would say is just they're just not comfortable with the conversation. So that's what we're here for. We're help educate you, make you more knowledgeable within the space so that it is a comfortable conversation for you to have. Another thing we run across as a carrier is just the underwriting process. It might be a lengthy process, something that advisors aren't willing to go through with their clients, but Principal has done a great job of putting all sorts of different programs and people in place to help that process go as smooth as possible. And like, for example, last week we had a policy issue in 3 days. So it can be done quickly with all the right information, and it doesn't have to be a painful process. And I would say that number one reason why more DI isn't sold is from a carrier's perspective is just the uncomfortable conversation and the lengthy underwriting process.
And then Derek, if you could weigh in on that, being that the title of this panel today or this talk today is DI isn't hard, it's just different. I'd like to hear some of your experience on the brokerage side, and especially since you all at the DI Center really focus on, just like your tagline says, making disability insurance easier. So from working with producers around the state, what are some of the common objections that you hear and your solutions to those?
Yeah, no, it's a great question. I'll echo that most of the time the questions are really coming from a place of just somebody throwing out something, almost a softball, quite honestly. It's really not a hard question to answer. It's just one that maybe somebody's not comfortable with. I'll use a line that, a lot of Andra Grava, RGA here in the current NAFATEX's president, is a line that he taught me very beginning of my career. And that is, my number one job is not to let you lie to yourself. So when you come and tell me, oh, well, if something happens to me, my spouse will go to work. Okay, the same spouse that makes 1/4 what you do, they're suddenly just going to pick up the slack. Or, oh, well, if I'm disabled, expenses will actually go down. In what world? That's not actually what happens. Again, Rodney hit on, we've seen it here, not me personally, but watching Andra and him being a caretaker and seeing that with clients and other friends and family. It really just makes you just got to stop and just take on that question exactly as it is. And, again, we go back to that number one line of not letting you lie to yourself. And if I preface that and I start the meeting with that, like, hey, that's really my only job, whether you buy, whether you don't buy, I just need to make sure you understand what's at risk and that I don't let you lie to yourself. And so let's have a real conversation and set the table. And usually from there, the objections don't even come up because the person stops and thinks, well, okay, yeah, that's really probably not accurate. And the one thing I will say, though, getting a little bit specific as to the objections, the one we hear a lot, and I think we're getting into one of the questions, is the group one. Say, oh, well, I already have coverage and I'm good there. And so, I know we're going to hit on that one in greater detail, but that one really, once you start to explain, hey, it's not an either or. Covey wrote a book years ago, The Third Alternative. Why is it this idea, oh, I have it through work, therefore there's nothing else to discuss? Okay, you can have it at work. You can also supplement that coverage and let's have a conversation about that. And usually what we find is if you just stop and ask one very simple question, the objections start to fall away. And that's if you were sick or hurt, would it bother you? What would you do? And then just shut up and let them actually think about it and have to answer it. And usually from there, any objections are a whole lot easier just to have a conversation about.
And Rhonda, real quick, something Austin and Derek both said struck something for me. We're talking a lot about the objections we hear from advisors, or some advisors, but mostly clients. But one thing, and Austin, you probably have heard this from working with advisors a lot, they look at cost, themselves. So, oh, I don't know if I would pay $200 a month for this $15,000 a month benefit. I talk with a lot of younger advisors all the time, and they won't present it because, well, that's just too expensive. And I'm going, really? So I think the more that we can get it through the advisor's head first, how important it is, it makes it even easier with the client as well. So
that is such a great point. And I'll just add something real quick to that. I have one advisor that I work with. He shows every client the maximum, which is going against the grain of what most advisors do. Most advisors kind of narrow it down on what they know of the client. And without fail, he shows them the maximum every time, and they take it every time because he presents it in that way that this is so important to you. I'm showing you everything that you need to have. The only thing sometimes that they take off is the retirement protection. Outside of that, they take everything he presents to them because he believes in it so much. So that self-limiting conversation that we have certainly is a strong objection to whether or not people take it later. But Derek, you mentioned something about that I would really like to get into, and I'll let you start it off, about the conversation of group coverage versus income protection, individual income protection, and layering those together. So if you could, how do you discuss that and review that with your clients and the brokers that you work with?
Sure. Well, I think the first thing to do is, as best you can, pretty quickly, just try to get an idea of what they actually have, because I think that's the biggest part. People don't actually know. The first thing we hear all the time is I'll get, quote requests, I'll get inquiries and say, hey, they have 60% through work. They're making $350,000. Okay, 60% of what? Oh, just 60%. Possible, but unlikely. Technically it could be a self-funded plan, but that's highly unusual in the long-term space. And so usually that's the first part, is just kind of getting into a little bit, okay, well, here's how group long-term disability, which is different from group short-term, typically works. We're typically talking a certain percentage, 60% being common, with a cap. And without fail, if it's an insurance contract. If this is group insurance, it's going to have a cap. And so these people who think, oh yeah, I have 60% of my $350,000 salary. Well, no, you have 60% up to $10,000 a month. It's paid for by your employer, therefore it's taxable. So now we're talking about $7,000 a month, and you make $350,000. It goes back to, my job is to not allow you to lie to yourself. Are you good on $84,000 a year? And if the answer is no, then let's talk about what we can do to supplement that. And usually when you have the conversation just quickly that way, with really understanding what somebody has, then it becomes very easy to discuss, hey, I want you to be taking home 80%, not 20 or 25 or 40, because that's what you're actually at right now. And I've also heard it put some ways, especially with producers who work maybe a lot in like the physician market or the really high income earners, where the spouse may not be making as much, or even if they are making as much, you're still going from two $350,000 salaries to one, where they'll make the comment of, oh, how would your spouse feel if you came home with an 80% pay cut? How's that conversation going to go? And that, again, usually it stops and goes, okay, wait, so what can we do? And then you start to get into what that coverage can look like, how you can supplement amounts. Very rarely do we actually get into even the definitions in the group contract, but that is another place that sometimes you can just quickly point out, is to say, hey, the group disability you have, it's a great first layer. I'm not knocking group LTD at all. It's a fantastic product. It exists for a reason. Pricing's great, but it has its limitations. And especially when you get into the white collar markets, the professional markets, the self-reported limitations, meaning that, fatigue, that's self-reported. So you're saying I'm disabled, I have fatigue, and that may be either fully declined under that group policy or have only like a 1 or 2 year benefit. That's in most group contracts, not all, but most, as well as when you're getting into definitions of disability, what the group calls own occupation and what the individual world calls own occupation typically aren't the same thing. So you can really get down into that once you start to decide what somebody has. But I'll be totally honest, rarely do we ever even get that far into it once somebody tends to realize, oh, I really don't have what I think I have, and I've got a lot bigger shortfall here than I assumed. But the people on this call, Austin, Rodney, myself, you as well, Rhonda, all of us, get into that conversation on the regular, as far as, hey, if somebody's really pushing back on, oh, no, I'm good, here's what it covers, here's why. Usually with just a couple of talking points, go line by line, it's pretty easy to knock that down.
Yeah, and Rodney, I know something that you're really passionate about is developing younger advisors in this business. So around that conversation, share with us some tips about how you have that conversation and how you would encourage younger advisors to open that or to use that as a door opener.
I think Derek covered it phenomenally well. It's really just, you got to make it real to them. And, if they don't know what's in their policy, which I'd say 99% of people don't know what's in their policy, if you can get their policy, that helps. You can kind of show some different things, but most people aren't going to agree with you based on words. They're going to agree with you based on how they see it affecting them. And so you have to really tell that story. And I mean, Derek's, I think, really great example of making 350 and then all of a sudden you're making 84,000. How would your husband or how would your wife feel about that? Really thrown into that of, all right, let's say that, you're making 350, you're the one that has the health benefits. You're the one that has all these different things. How are you going to have health insurance? How are you going to pay for the medical bills as that's coming in? And disability insurance is not about paying the medical bills. That's not what I'm saying, but it's where are all those costs going to come from? How are you going to get income to cover that? And so you have those conversations with those clients. Maybe part of the reason why they need more disability is to pay for the COBRA payment while they're on disability. Maybe it's, wife, has an independent job. Maybe it's to, or husband does, maybe it's to increase that health benefit. Whatever it is, there's a lot of different things you have to have that conversation with. So to answer your question, Rhonda, what I do with a lot of younger producers is I give them a few words like ask, do they know what coordination with Social Security means? Because that does affect benefit. What are the limits on their policy? And if you ask a couple questions like that, that provides enough, I won't say doubt, but enough reasonable, logical, hey, I may need to look at this a little bit more to get to that next step. The other thing I always tell them not to do is I don't look at it as I sell disability. So I always tell them don't sell disability. Yes, you can show them quotes, but you want to talk about income protection as part of their overall. And that's why I like to use the financial house that I talk about.
Great. I'm going to move on to the next question. Thank you, gentlemen. I think that there was so much covered there. Austin, for you, when you're, especially with Principal, you probably work with producers from all different companies and other carriers. What is some of the ways that you work with with people in the industry when you're comparing various companies and options?
Yeah, I mean, that's a great question. That might be maybe easier for Rodney or Derek to touch on, but from a Principal perspective, Principal is very strong within the white collar industry. If we're talking about executives, business owners, things along that line, Principal is a very strong product in that space. If we're doing GSI or a multi-life offering, Principal is very strong in that space. But when it comes to comparing other carriers, Rodney and Derek can touch on it, but I know different carriers are better off in different occupations and different areas. So if we're talking more of a blue collar worker, that's something that wouldn't really fall in the Principal perspective. But I mean, I'd love to hear what Derek and Rodney have to say.
And y'all can just jump in on that one.
Sure, I'll jump in there. So I'll say, one thing to kind of echo a little bit of what Austin said about Principal, the other part we were just talking about group, Principal's limits when it comes to what they do in group disability and going above and beyond that are really the highest in the industry. And I mean, that's just what you see is different carriers that want to play in different areas. But that is one that, just in terms of the amount of coverage that Principal will go and offer tends to be, pretty substantially higher than a lot of the other companies in that world when you're talking about going and supplementing the group contracts. And again, if somebody's just flat out of, I want the most I can get, period, there's ways to layer multiple companies even there too. As far as kind of how we compare, one thing that I do know I point out in this world especially is that, really everybody always asks, oh, what's the best policy? I want the best policy. What's the best policy? And, again, we kind of have a tagline of, well, the best contract is the one in force at the time of claim. That's the best contract. So let's find a contract that you're willing to look at, hold, and keep, and you understand the value behind it. Because I think, that's one thing where if somebody really understands and has been in this business a long time, they can communicate the value of an income protection policy, and that helps that person kind of keep it, and they understand it. It's on their books for years. Disability insurance is very sticky. But then there are other times where, maybe somebody really doesn't need all the bells and whistles. They're okay with scaling back on cost of living. They're okay with scaling back on, this feature or that. And that's where it kind of just comes down to being able to say, hey, what is that area that you're willing to come in? And we don't typically go to budget first thing. It's more so if we get, like the previous question, start to get into those objections of, oh, well, this costs too much. It's okay, well, I can take a couple things off. Here's what that would do. Well, I still want that though. Okay, well then let's talk about that. And one other thing we always come up with in this same world of picking carriers is, hey, at the end of the day, across all of the insurance companies, you get to choose two. What that means is there are three parts to every contract: the benefit amount, the policy language, the definitions, and the premium. You get to pick two. So if you want the highest benefit amounts and the best policy language, the company chooses the premium and you need to pay it. If you want a low premium, but the very highest benefit amount, well, then we're going to have to change some language. The third part of that, being that, okay, you want to pick a premium, you want to dial in the premium, you want the best language possible, well, then the benefit's going to have to go down accordingly. So, it just really simplifies. And it's not just disability insurance. That's really all insurance has those three parts of a contract. And so kind of just takes it back to, hey, look, you get to pick two. So in terms of what's the best, how do we discover carriers? Well, then you tell me what's most important. To that previous example in the group world of, I want the absolute highest benefit I can get, and I have group, and this is what it is. Okay, well then the highest benefit's probably going to be principal. Here's what that looks like. So it kind of just tees up that conversation and allows the client to understand, hey, you have a lot of control, but you get to pick two, and the carrier's going to decide the third for you based on what is most important.
Rodney, did you have anything on that topic that you would like to add, or along the lines of what are the best ways for an individual to shop for disability insurance?
So I think Austin and Derek covered it pretty well. I mean, what I do is when I'm talking about income protection, I don't like to call it a fact finder, but I'm really asking them what's important to you. Tell me about your lifestyle. If you did have something where you're getting cancer treatments, things like that, is your spouse going to take time off to take you to the treatment center or things like that? So, do you need, would you find someone to drive you? Trying to really just figure out what's important to them, because then that leads to the definitions. Like Derek said, you have those three options, and also it leads to the benefit. And then, looking at their budget, so you can kind of put all of that together. But and Ronnie, can you re-ask that one question that you just asked?
Yes, when you're looking at or working with someone, what's the best way to shop for disability insurance?
Okay. So, honestly, there is no really great tool that you can just go like, you can go to a rate quoter on life insurance, things like that. Some companies are on WinFlex Web where you can run the illustrations. But what I like to do, and this is me, and I understand that this is why some people don't sell a lot of disability insurance or don't present it, because it is so different per each company and the contracts. And Guardian has their definitions, Principal has their definitions, Ameritas, all these different companies have their different definitions. Mass Mutual, if you sell enough of it, you start to learn the contracts. But that's where people like Derek are a good fit. Or I have relationships with every wholesaler of every company, and so I now know that there are certain companies that, like Austin said, I know Principal is not someone I'm going to go to for a factory worker. I have a couple companies I'm going to go to for that. But I am constantly emailing or talking to internals or external wholesalers every day. Hey, where do you fit on this? Where do you have this? I'm a little studious. I have downloaded every single OC class guide. I've read them all. I read them all every year when they update them. So I do know where everyone kind of falls, and I have a chart that I put together that I use for that. But that's a lot of work. I get it, but those are just some of the different things that I try to do to make sure that I know where I'm going. Because the thing is every company changes their op classes. They change what their occupation classes. They change how they're doing things almost every year. So where company A may have been great in podiatrists last year, maybe they changed it to not so favorable this year, or maybe they had a really bad claim experience the last 3 years, so they are not allowing it, or chiropractors, or whatever it might be. So those are some things that you have to constantly keep up on it. But I think from a pure consumer perspective, I think it's really hard to shop because I think the information that's out there is not very detailed, and so you have to know a little bit of that information to help your consumer, help your client get there.
The next question, and then we're going to take a different turn after this one, is what's the most important provision in a DI policy? And I'd like to hear from Austin first, and then Rodney or Derek, one of you can jump in on that. So the most important provision in a DI policy, Austin, is what?
Yeah, I'll just touch on one so that Derek and Rodney can have theirs as well, but I'll start off with the definition of disability. So that can differ from carriers, and obviously something that's very important to know is what that carrier considers disability. From a principal's perspective, we have a very strong and liberal definition. We won't force the insured to go back to work. So we have a very strong definition of disability. And that's what I would say, from my perspective, is probably the most important provision, but I'm sure Derek and Rodney can touch on a couple others.
Derek and I think we'll have pretty much the same definition or the same provision. So I'm not going to steal his thunder. I'm just going to say it's the provision that's going to allow the policy to pay the best. So, whatever, like Austin said, whatever that definition is, in principle has a strong one. Other companies have strong ones as well. Whatever allows for the policy to be able to pay the claim. So, Derek, I saved that one for you. So go ahead.
Well, I appreciate it. So yeah, I think Rodney and I were both going to go towards, whatever the partial and residual language and rider is in the policy. That is just so crucial. And it, again, depends on the carrier. And the blue collar carriers, nothing against them. We work with them. I love them. But typically, just because you have residual or partial, that's not then going to also help towards justifying the elimination or the waiting period. Versus a lot of the white collar carriers add language that says, hey, because you have this extra rider, we're now going to let you satisfy that waiting period with either total or partial days. It doesn't have to be all total days. So there's a lot to, having a residual partial. I mean, that is the one feature, outside of course, the definition of disability that we recommend every time, 100%. Like, you need this on the contract, no matter who you are, what your job is. There's different carriers have options. Some carriers, you just got one. Some carriers, there's 2 or 3 different choices, but having a residual or partial rider it just completely changes the ability for that contract to be able to pay, how it pays, different scenarios. And one other thing I'll throw on that is recovery benefits. I think we're getting a little bit into how different claims can happen here soon and what we've seen. But that's a huge one, of the ability for somebody to actually come back from a total or partial disability, still be working, but maybe not be back where they were, especially in the service world. Your professionals, it's not just doctors and dentists, it's attorneys, it's CPAs, it's everybody, veterinarians, folks in that service environment. When you come back, if you've been out for even just 3 to 6 months, you're telling me there's been no disruption in the business. There's no clients that maybe have gone and found somebody else and are going to stay there. So you may come back to work full time, but you don't have the income you did before. And so there's ways, a lot of people don't realize, that disability policy may pay, even though technically you're no longer disabled. Because under those provisions, there's still benefits available because your income's still lagging from what occurred to you. And so that's just one, to Rodney's point, that is so crucial. Like I said, is just some sort of residual or partial on the contract. We really advocate for that, no matter how bare bones you might be able to be wanting to go and how much you might be trying to look at the premium. That is something that, especially for business owners, you got to have it.
Yes, exactly. And you brought up a great point about that we're going to start discussing some claims, and we will get to that. I want to spend a couple moments on everybody's favorite topic when they're looking at protection is the underwriting. So again, with the topic of our conversation today being that DI isn't hard, it's just different. Let's talk a little bit about what some of those underwriting challenges may be and how each of you address those. First, getting into some of the financials, and then we'll talk a little bit about the medical underwriting. So y'all, whoever wants to jump in first on some of the financial underwriting and how you prepare a client or a producer's client to go through that process.
Yeah, I'll jump in here and take the financial piece. So if they're a W-2 employee, so Principal's done a great job of just making this process as simple as we can. So if they're a W-2 employee applying for $10,000 or less of monthly benefit and 50 or younger, they qualify for simplified underwriting. And within simplified underwriting, no financials are needed. All right. And if they're a W-2 employee, but they aren't eligible for simplified underwriting, all we would need from them is their W-2. And things get a little bit trickier if we're working with a business owner when it comes to financial underwriting. So if they're a business owner, we would need their latest tax return with all schedules. But yeah, in terms of disability insurance, we are protecting and insuring an income. So we do need to have as clear of a view of what the client's income is.
I would just add to that is, and Derek, I think I'm just going to steal your line here, but especially if you are if you're working with business owners or even high net worth W-2 employees, before I even submit an application, I ask for everyone's tax return. Go through their tax return, know what they've got. Even if they are W-2, like Austin said, it's a little bit easier to get in there. But you might find that, hey, they get farm income because of some farm they inherited 10 years ago. And that's going to affect what that offer might be. So there are some different things that the better you can read a tax return, the more you can provide to your client and make it the financial piece of it really make a lot of sense.
Agreed. Yeah. And Rodney's heard me, I think, speak before on, everything you can do with a tax return. I would just throw out there, if you're not comfortable with them, totally understand. Find somebody who is either, working with somebody at the carrier, working with a wholesaler, working with another producer and doing kind of split business, because it's not just about this sale. It's about all the things that are hidden in that tax return, just from a financial planning, a life insurance and annuities perspective. It's not just about this, although that's another aspect of, Austin talked about the business products. I see a lot of instances where people come. I had one just earlier this week. Somebody said, oh yeah, this guy makes 300,000. Great. Give me the tax returns and let's look through it. And I get the tax returns at the same time as the app. Well, he grossed 300,000 and then he wrote off everything but the kitchen sink. I think actually wrote off the kitchen sink too. He was down to like 50,000. It just wrote everything off. Well, here's the good news. Good news, bad news. I can't get this guy the 13 to 14,000 a month we were talking, maybe 15,000 a month we were talking about before, but I can get him a few thousand and then I can go get him 10,000 of overhead. Here's what that looks like. Oh, and he's got a business loan. I can cover that for the full 10 years. I just need you to get me a little more detail on it. So it's something that with a little bit of knowledge on a personal business tax return, you can really still, find a lot of ways to help these people. And at the end of the day, again, focus on that prevention, preventing that business loan delinquency, preventing the doors closing on that business, and making it work. And the last thing I'll say to the financial side is, I usually, when we talk about what we need, I don't ever even really use the full listing out the schedules. Because if you look at the different carrier agent guides, they'll say, oh, we need a C and an E. And that I always just go with, I need your complete tax return, all schedules, statements, W-2s. If it's 200 pages, I need 200 pages. Whatever it is, get it to me and I promise it'll be worth it. And to that end, again, when we're talking about self-employed people, business owners, I always start with, let me just preface, it's going to be their net income after expenses, but before taxes. That's really what we're really, and just that one liner kind of helps people understand a little bit of where we're trying to go and sets that table. But yeah, the sooner you can get the financials, I promise, the better it's going to be. And more importantly, the more you're going to kind of open up assisting that client across the board. And if you're not comfortable with that, find somebody who is. We get a lot of people that come to us and I end up pushing back and saying, this is what we can do. And oh, by the way, have you talked to them about this or that, and setting up, another sale for the agent that they didn't even realize was there.
I think that's one of the rare situations where more is better, is when you're getting the financial documents. Just like you said, we always try to encourage that full return. Otherwise, you're going back and forth, and it just delays the underwriting process. But also in times like COVID, for some of you on the line who, you're working with business owners in particular, there's times where their income, especially during the pandemic, may have really dropped. But if we can go back and get an additional year that shows a history of increased earnings versus what it's been the last couple of years, we can advocate for a stronger offer in that case. So sometimes more is better. And I think this is one of those rare situations where that's the case, outside of barbecue and crawfish, of course. So we're going to move on and talk about claims. And I'll tell you, I'll share briefly about this. Just this year, since
Rhonda,
February. Yes, go ahead.
Before we go there, I just want to talk about the other side of disability underwriting. And that's
I'm so sorry. Quick. You're right. That was the other question. Pardon me.
So from a producer perspective, I look at the underwriter not as my enemy. I look at the underwriter as my team member. and I've developed relationships with underwriters at all the companies I work with. I can call them up, I can talk to them, but I believe when I'm putting in a case, I'm couching that case for that underwriter. And so it goes back to the earlier comment about which company should I do or things like that. I know if you've got type 2 diabetes and your A1C is in certain ranges, I know certain companies aren't going to want that. Other companies might take a better look at it. All those different things. So the more I get the medical information up front, I've got a 99% placement ratio because of the fact that I do all that work up front and then I submit it in. And I say 99% of placement ratio, I have a 98% approval ratio. That 2% is because something came up that no one told me about. But it happens, but the more you can do that work up front, and I think it's a little different than life insurance where, there's a lot more gradient you have on there, but on disability, it's very specific. And especially if you know about, hey, they're going to go see a chiropractor or hey, they have a weekly conversation with a shrink, you can start to talk to that client about the fact that there's probably going to be a spinal exclusion. Here's what a spinal exclusion looks like. There's probably going to be a mental nervous exclusion. Here's what that looks like. Here's what they might cover. Here's all those different things. So the more you know, the more you can prep your clients. So.
Yeah, and I'll just
Exactly,
piggyback on
Derek,
that.
yes, thank you. And can you share too, a little, Derek, getting more into some of the adverse medical conditions too, and how to prepare for that?
Yeah, and definitely just want to piggyback on what Rodney said as well, because setting the expectations, again, the title of this is DI isn't hard, it's just different. Setting the expectations is, I think, the number one part that is truly different about this market versus, especially annuities where, okay, they're really not underwriting this, and even life insurance where it's looking at a different kind of risk. And so from our perspective, that's one where we really try to do the same, where we talk about it up front. Like, hey, one question I always ask, I don't ask, oh, what's going on with your medical history? I ask, what medications are you on? That's going to get me to the medical history a lot faster than actually asking about the medical history. So that's a great one that just, hey, what are your current medications, or what medications have you taken in the last 2 years? And we can run with that, and we can do a lot with that. As far as, kind of specific medical things we see, you're seeing a lot more with mental nervous, especially when you're dealing with younger clients, people who are still maybe trying to get through school or get through training, and that's just one where, again, if you're able to set the table and say, hey, there's going to be a mental nervous exclusion. Here's what that means. Here's what it doesn't mean. And this also may not be a permanent thing. A lot of times these exclusions aren't permanent. There is an opportunity to go back and reconsider them. Again, that's dependent upon the individual situation and the carrier, but there's a lot more fluidity there. And even further than that, a lot of people think that automatically, oh, if I have an exclusion, there's nothing that can ever be paid there. In actuality, again, depending upon the individual company and the contract, there are situations where, oh, I have a spine exclusion. I get into a car accident, I fracture my spine. That has nothing to do with the, soft tissue that I had before, and that could still be a payable claim. So there are definitely situations, again, that depends on company. When you're getting more into the blue collar companies, that's typically not the way they're going to see it, just because, again, they're talking, higher risk there versus the white collar companies. So I think when you're looking at those kind of things, don't assume an exclusion is a deal breaker. We're the same with Rodney, and I think most people that really focus on this market and focus on the process are too. Our placement ratio was above 95% of over 1,000 applications. I mean, it's just a matter of looking at it, focusing on it, and not letting something go in when it's not going to go anywhere. So if I tell you, hey, here is what you have sleep apnea, here's what that means. It could be totally standard. Years ago, sleep apnea was a really big problem. It's not so big a deal anymore as long as you're controlled and it's maintained and you're doing what you're supposed to. But if you're not, it's, again, a pretty easy conversation to say, well, you're not actually seeking the treatment you've been told to get. So yes, the underwriting is going to be more conservative. Here's what that means. And if you go seek treatment, we can get you better. Is that something you're going to do? So those kind of conversations, and again, just all goes for us back to the setting of the expectations and, making sure people, it's just an honest conversation. I'm not going to let you lie to yourself. Let's talk about it.
I had this 27-year-old teacher my first year doing this call, and he was in tears because he had a stroke. And 3 weeks later, he had used up all his vacation and all his sick days, and he had to go back to work. And he had so much pain in his legs, and they were still trying to determine what it was. He couldn't even stand for more than 30 minutes at a time. And so he was trying to rack his head around how he's going to go back to work, and then trying to get what he called disability insurance, thinking that that means insurance when you're disabled, you can apply for it. And it was a very challenging conversation with such a young person to be able to explain to them what that meant. And so as we all know, the underwriting process can be a little arduous, and it is, like you've both said so well, setting those expectations and having those conversations up front is key. But the reason why it's challenging is because people actually use it. So just this year alone, since February 24th, I filed 7 claims, and they run across the board, but they were all under the age of 53. 7 claims for people under the age of 53. I was just still astonished by that. And so I'd like you all to share some of your experiences in the claims process, and especially if there's a particular story that really impacted you and changed the way that you do disability insurance.
Yeah, Ron, I have a very similar story as the one you just told about that teacher, but whenever we work with newer advisors in the industry or advisors who are looking to start selling disability, we always recommend that they buy a policy on themselves to start, right? Because no better way to believe in a product and have confidence in a product than to have your own policy. So we were working with a new 27-year-old, 28-year-old advisor, a young guy, going through the process of getting him his own policy. And along the way, during the process, he suffered a small stroke, similar to like what you just said, and lost his insurability in his 20s, which is obviously devastating for him. But just a great point to make, that we're not only protecting our clients' income, but we're also protecting their insurability. And that story really hit home with me, because somebody in their 20s is thinking they're invincible and they don't need disability insurance and it's never going to happen to them, but it can happen tomorrow to anybody. And that story was a tough one for us.
For me, I've got 2 stories. One that was at the very beginning of my career. So my first ever client was one of my really good friends out of college. Bright guy. I introduced him to his wife because I've known him actually since I was 2, and they were married. He got a job with a tech company, was making $150,000 out of college. 24. He was my first client. I did a financial plan with him, and he understood the importance of life insurance. He bought a $5 million term policy with me. He fought me for 4 months on that DI policy. I finally convinced him he needed it, and about 2 years later, he was having some pain in his abdomen. He had they went in, found that he had stage 4 stomach cancer that had spread to his kidney, his bladder, and his pancreas. He lasted 9 months, but that disability policy allowed him to, be with his wife, do those different things. The sad part is, his son, they had just found out that she was pregnant. And so, but he got to spend time with his wife because of that. He got to not have to worry about those different things. The $5 million, he already knew was there to take care of everything else. But the one thing he said on his deathbed to me was, "Thank you so much for insisting I get that disability policy, because we would have lost everything had I not had that." So that's probably the biggest one. The other one is, you mentioned a teacher. I had a teacher that's a neighbor of mine that during COVID just got so stressed out, and they didn't know what they were going to do and all these different things, and developed severe OCD. They are now getting $4,000 a month, and that's covering a good majority of their income, and as they get better. So.
Yeah, and obviously, all these are powerful. The one Rodney just shared about his friend. I mean, that's the one that those are the ones you think about forever, right? They stick with you. For me, actually, when I first thought about this question, a lot of the things that popped in my mind were the claims that weren't, the claims that would have been, but somebody didn't buy. You know, people, we get calls, unfortunately, where somebody will say, hey, you know, so-and-so that we were talking about a couple of months ago, well, they had a heart attack. Like, can we do anything now? And Rhonda, you kind of hit on that before of no, I can't. There's nothing. Specifically, two claims though do stick out to me, just because of the uniqueness of them. One very, very recent, won't get into the details on it, but it was a woman that she had both life insurance that had kind of a living benefits aspect to it, as well as a disability policy. Well, she's been on DI claim for years and been collecting and policies on the waiver of premium. Her living benefits, you know, tied to activities of daily living, just started paying. So this is a woman that's only in her, you know, 50s, but I just kind of look at that and it's just fresh in my mind that it goes back to that holistic planning of, you know, what do you need and what are these things for? You know, if she didn't have the disability policy, that life insurance with the living benefits would have lapsed, because the definitions and the things that she was on, you know, she's not one that bought waiver premium, but quite frankly, even if she had, the type of disability she had may or may not have qualified her for the waiver premium, because depending upon the carrier, the definition is not the same as a true individual policy. So, you know, that's one example where it kept the rest of her financial house in order, having that policy and allowed future benefits, you know, 5-10 years down the road to be paid because something stayed in force because the DI was paying that premium. So that's a huge one. And the other one, just because it's very unique, was a couple of years ago, is actually a pastor who was a presumptive claim. So what that means is day one claim, really no waiting period, due to is actually a temporary loss of sight in both eyes. He had detached retinas, really weird scenario. And there are a couple carriers who don't require the presumptive to be irrecoverable. And so he was just, again, goes back to the right policy. It just depends on your situation and what happens. But for him, seeing only a few months of benefit happen, but that few months of benefit pay out, and then a few months later, something happened and they had to do surgery again. So he was again presumptively disabled. Only time I've ever seen an individual be presumptively disabled twice within like a year of each other. And then unfortunately, he actually ended up passing away from a third surgery a little bit after that. It was just this really, you know, situation that he didn't collect hundreds of thousands of dollars. But as a pastor, what he did collect for those few months made all the difference in the world for kind of him and his family. And thankfully there was life insurance there, but that was just one that was just very unique. And just, it goes back to, you don't have to collect $1 million for this to be life-changing. You know, it can be $5,000, $10,000, and it can change everything.
Thank you all for sharing. We're at our time, and if the panelists can stay for just a couple more minutes in case some of you want to ask a question, great, we'll stay on for a couple more minutes. But thank you to everyone for joining us. We hope that you've got some valuable insight here. I know all of these gentlemen would be happy to speak with you as well as myself. And thank you to NAFA Texas for sponsoring this, and to Rebecca. She's behind the scenes. Y'all can't see her, but she does a great job for NAFA Texas in ensuring that everything runs smoothly. Rebecca and Renee. Thank you again, everyone, for joining us. We'll stay on for another minute or two, just in case there's some questions for the audience that have not yet been answered. Rick was asking about the goose and the golden egg story, because I know that story and I know I've heard it presented. Would any of you like to talk about that?
I mean, I don't mind. Yeah, I don't mind touching on it. I think it's literally 10 seconds of, you know, what are you insuring? Are you insuring the goose? Or are you insuring the egg? And at the end of the day, your ability to earn an income, you're the goose that's laying the egg. You're the one that's bringing that money in. You're the one that's taking care of everything else. Everything stands on top of your income. And when you aren't able to go and make that dollar, everything else crumbles. So, you know, if you lose your ability to work, you lose the ability to lay the egg. You're the goose, insure yourself.
Precisely. There was one other answer. I'll just answer that one. And I typed the answer, but for those of you who may be wondering the same thing, what's the standard commission? So talking about being the goose and the golden egg, for you as the producer, standard commissions can vary. I think typical, most carriers, if I'm not mistaken, gentlemen, are around the 50% of first year premium mark, but there's tables and charts depending upon the carrier that can affect your earnings depending upon the block of business you have in force. I would encourage you to just contact individual carriers.
The one thing I would add is Derek mentioned it earlier, DI business seems to be a lot stickier than a lot of other types of policies. So a lot of them have really good renewals. So it's not just the first year business, it's the consistent business and consistent income coming in as well.
Exactly. All right, again, for those of you still here, thank you for joining us. We look forward to hopefully doing this annually with all of you in honor of Disability Insurance Awareness Month. And thank you again to NAPA Texas, Solve Your Puzzles Principal and the DI Center. Enjoy your day, everyone. Take care.